to Corporate Cafecito, a podcast based on professional development, career growth, and respecting our cultural identity. Hi, everybody. Welcome back. Yo soy Nayeli Suarez Guest, aquí con ustedes en Corporate Cafecito. And today I have a very special guest, David Olivencia from Angeles Investors, who is got the kind of background that you would see in a Wall Street movie, right? Like started out electrical engineering, then got his MBA, then has gone to the in front of Congress. He's rang the bell at NASDAQ. He is just the kind of person that you're like, hell yeah, he's one of us. And so one of the things that he's really good about is networking, so much so that he wrote a bestseller called, networking, and the work is capitalized. So David, tell us a little bit about yourself and your impressive career.
Oh, great. Well, look, it's great. It's great to be on. Thanks for having me. I have a career that has four threads to it, right? The first is, I'll call it like the corporate executive thread in the technology industry. I was a senior tech executive at couple Fortune 500 companies, Fortune 100 companies, and got to see all the amazing things that have happened in the technology industry. So that's the first one. The second part of my career is about service, right? So I'm primarily in service and nonprofits. A lot of it in our Hispanic and Latino community. I was the president of the National Society of Hispanic MBAs when I lived in Detroit. I was a co-founder of an organization called High Tech Hispanic IT Executive Council. I served on the board of the Congressional Hispanic Leadership Institute, and I'm a co-founder of Angeles Investors, right? We are finding, funding, and growing the most promising Hispanic and Latinx startups in America. So that's the second part of my career. The third is I'm an angel investor. So 15 years ago, I've been investing in all these startups. Now invested in over 70 startups. I have 3 unicorns. We'll talk more about that. Maybe 4. We'll see. About 12 or so that are over 100 million in valuation, and then I've had 12 or so that have shut down. They've shut down. You learn a lot from the ones that shut down as well. And then the fourth is I wrote the book. I wrote the book on networking and networking excellence. And if you look at the first 3 that I talked about, what underpins a lot of that, whether it's corporate success or corporate crime in the corporate ladder, what I've done in the nonprofit space, and what I've done for investing, networking is throughout all of that. So I was pretty good at it. I wrote a book, done pretty well. And, a lot of great lessons to share, in the book, some stories that I have, but I interviewed a lot of great people too that are good at networking. I've researched a lot of good people and put together a methodology of how you can systematically do it to be excellent at networking.
Right now the job market is hard, right? It gets easy, it gets hard. It feels like there's a lot of job openings, and then people aren't getting the opportunities, or they don't get, their foot in their door. And I always say, activate the network. Like, that's why you have a network, is to leverage the network. And we love helping others. So giving others the chance to help us is like what the network is for. What would you say are like top 3, top 5 tips for networking? First of all, you should buy the book, read the book. It is a great, it's a great how-to guide.
No, that's a great one. That's a great one. Keep in mind, there's a lot of great books to read. So yeah, that is definitely one. But there's 3 major components in my framework, and I capitalize the work in the framework. The first is it's the foundation. So the first one is the foundation. And a big part of the foundation is deeply understanding yourself. Like, what's your vision, purpose, mission? What are you good at? What do you love? What makes you happy? But it's not easy. Those are like, everybody think, oh yeah, no. It's like, very hard part of the foundation. The other part is like, well, what are your goals? Like, now once you have that, you can say, well, what are my goals? And what are they? Smart goals, right? Are they specific, measurable, attainable? All of that for smart goals, right? A lot of power in goal setting. And then once you have those, you can say, well, what's my brand? Like, what I want the world to know about me and who I am, and be a magnet for my network. So that's just, and then you power that with rituals and routines. So that's just the foundation.
Yes.
Once you have a foundation, then you can go to the second part, which is executing. And when you execute, you want to identify the right people and the right networks, and you basically want to pour tons and tons of value into them, all the resources, all the strengths that you have to make them successful, not you. You want to make them successful. And then you measure it. You measure, how am I doing it? And you use those rituals and routines to power the second part, which is the execution.
Yes.
The third part is once you've done, once you have a strong foundation, you've executed, now you can optimize. So the third part is optimization. And that's done through networking events, which we all attend a lot of them. And then social media and digital, right? There's, there's so much going on in that space that you can extend your value and your impact, unlike any other time in the history of the world, right? So that's another area. So that's how you optimize. So you have a foundation, you execute, and you optimize. Those are the quick summary of the book, but
the
a lot
rules
more
of engagement.
Yeah, a lot more details are in the book.
Back in the day, and this was like late 90s, I would always, my mantra was like, it's not who you know, it's who knows you.
Yeah.
And now you think about, you fast forward, now people have to see you. And when we talk about our brand and the relevance, I always tell people, like, social media is such a powerful weapon, but weapons can sometimes hurt us if we don't use it properly and,
That's right.
leverage them for good. So I love that. And I think that's really important. And to your point, like, I think that the network that you've built, so Angeles Investors, and what you do for our community and how you help propel these businesses, is really important. And the entrepreneurial spirit burns bright inside our community. So when we think about, like, investments for our businesses, like, what is the starting point? Because I think a lot of times our mindset, and I'm generalizing, but, like, we think like, voy al banco, I get a loan, I start my business, si me va bien, good, si me va mal, we just pay it off little by little. But there's other options. So walk me through, like, what those options are.
Yeah, that's a great question. For every business, there's a capital provider, and it also depends on what stage the business is, right? Businesses start out with an idea, they get it going, hopefully it grows, and then hopefully it scales, right?
Right.
Many businesses in our community don't necessarily scale, right? So if it's I'm generalizing, right? But my uncles who do construction, my uncles who do car repair, those businesses are hard to scale. My
Right.
grandmothers who were cooks in a Puerto
Mhm.
Rican restaurant, right? Restaurants hard to scale. Our community does them, right? So businesses, the more mature you are, they got of how old you are and mature you are, and how scalable you are. And then you have all kinds of different options. If you're very scalable, right, that you're, a lot of times you're using technology, but not necessarily, because you can create. We have a company called Mas Panadas that we invested in. Basically, they've done
I've
empanadas,
eaten
but
them. Yeah.
yeah, and they're growing like
Yeah.
crazy, right? But so they're creating plants and all that stuff. So what happens is it's a mindset of putting together a business plan that has the scalability, and then getting high risk, high reward capital from private investors. They call it friends and family. But the challenge within our community, not a lot of friends and family that are sitting around with $50,000, $100,000, $200,000. So we pool our resources together to cut those kind of checks. But how you would do it is, you should think about the scalability of your business. If your business is going to be scalable, then you can go to investors like Angeles. If it's a traditional business, you're probably better off going to a bank or friends and family. But capital is an amazing creation that really helps businesses grow and scale, and our community can do a better job of learning more about it, applying it, using capital, to grow and scale, right? And that creates, wealth, jobs, opportunities, all kinds of stuff. So,
is there a certain size, like, let's say, I always use, all my references are tacos. So let's say you have a good taquero, he opens up a taqueria, le va muy bien, he wants to open up another one. Like, is there a certain size you need to hit to become to go to investors for?
Yeah. So if you're going to come to analyst investors, even in this example of a taqueria, we would say, we would look at it and say, okay, but if can this scale to 100, 1,000, 10,000 taquerias around the country, and how fast can it scale? What are they going to do and put in place? Are they going to franchise it? Because if it's most taquerias, it's like usually one or two, maybe,
Right.
right? 90% of them, right? So
And
we
the
would
number,
really,
right? Like the taquería número 17.
yeah. So we would look at it and just kind of get an understand, is this really scalable, or is this, if it's scalable, then we start, then we'll dig into the numbers, right? So it could be, so they can say they're scalable. Yeah, we're going to create 10,000 taquerias all across the United States, and maybe we're going to go international. Who knows? So what we like to see then is, okay, well, you have the plans in place to do it. What have you done? Like, okay, well, do you have 5 that are working? Are they all profitable? Are there lines out the door? Do customers rave about them? How are you marketing it? So we would take a little bit of evidence, and you can give money along the way. So, for example, in that example, right, they might come up with the concept. This is, I want to do 10,000 taquerias in 5 years, or whatever, 10 years, 5 years, 10 years. And they say, yeah, but right now it's just an idea. And they would, and then so the amount of money that we give is a little bit, a little bit's relative, but let's say anywhere from $100,000 to $200,000, right?
Like we say, de acuerdo al sapo va la pedrada. So you pick the money based on where they are, right?
Right. And then we would get a certain percent ownership of the company, which some people in our community, they don't like to give up the ownership of of what they have, right? So that's an issue. But let's say we give it to them, they're off running, they create 5, and then they come back and say, hey, guess what? We told you we're going to create 10,000. We started out, you gave us money, we've created 5, they're all profitable, they're going good. I want more money to grow and scale. And now we might give them $1 million. When I say we, I mean it's a bunch of people together that pull their money together. And let's say we gave Canela Media $1.6 million as an example. So we would pull our money together, invest in them, and we'll see how they do. Hopefully they continue to grow, and at some point they sell, they exit, they IPO, somebody buys them, and then as investors, we will hopefully get our money back plus a nice return. These returns for these type of businesses, if they're good to great range, you're talking 10, to sometimes 100, 200 times back your money.
That's wonderful.
And then some, because they're high risk, you get 0 back, and they shut down, right? So this is like you'll invest in 10, 2 or 3, like you'd like to think all of them are going to make it, but 2 or 3 won't make it. 2 or 3 will do okay. 2 or 3 will do very, very well. And then you hope, you look at that portfolio, and as an investor, you should get a good return.
So if you, just so that we clarify, when you're an investor and you get, Angeles investors involved, you get your money when the company is sold, or is there ever a time when they could buy back the equity, or how's that work?
It's typically when they're sold, they're either bought by a private equity company, they're sold to another company, in your example, another taqueria who's growing and scaling that, or they do what's called an IPO, or initial public offering, and they go public, they ring the NASDAQ or New York Stock Exchange. Those are 3 major ways. There's other ways that you can get your money back. It's a little bit more complicated. There's things called secondary markets and all that kind of stuff. But usually, this is as an investor, this is unlike the stock market in that when you invest, it's not like you can just pull. It's kind of stuck there for probably 6, 7, 8 years, sometimes 10 years. So you got it's high risk, high reward. It's also patient.
Yes.
Capital, paciencia.
So if someone wanted to approach like an investment company, I'm thinking like they'd have to have their business plan, they would have to have a financial model, future plans. What else would they need to bring?
Those are big. Those are, I'd say 80% of it. There's a thing called the capitalization table, as an example, who's invested, like who are the owners of the company and what percent does each owner have? That's an important one. See, those are some, and there's, some of these, sometimes there's bank statements and stuff like that, but yeah, that's not really, there's all the articles of incorporation, all the stuff you need to start. That's pretty common stuff. I'd say the other things though, and it goes back to our earlier conversation, is like, what are they, it's their history and their track record and what they put on social media, what they've done in the media, because really a lot of times you're investing in the CEO, right? Or the founder,
Right. You're betting on the
founders,
team. Yeah.
right? And so you want to get an understanding of, so there's all of your assets that are public out there about you that you want to make sure you have control. So those are the major ones.
What are the different levels? Because I know there's like, and I'm going to throw out terms and I want you to know, I don't know what I'm saying when I say them, but there's like the
Okay.
pre-seed, the friends and
Sure.
family, there's series
Sure.
A, B,
Sure.
what's a venture
Sure.
capital, angel investor, private equity.
Sure. Sure. Well, it wasn't a time, maybe 15, 16, I don't know, before I started this, it was all kind of new to me too. So we should never be, we were all,
Yeah, we've
didn't
all
know this
been in
stuff at
this.
one
Yeah.
point. So, a company has an idea. The first round of funding is typically your friends and family. Things go well. The next round is what they call pre-seed. Pre-seed is typically you're still an idea. You maybe have a proof of concept. You have a little bit of a team in your pre-seed. The next one is seed. And then seed is right after seed. Seed is, you've got a product, you've got some customers, not a lot, but you've got some to start proving it out. You've built out a little bit of a team, and that's seed. And then after that is Series A, B, C, D. It goes on, and then hopefully at some point IPO. And you can IPO technically anytime, but usually you're 100 million in revenue or ish, and that's typically like Series B, C, D, or it could be sometimes A. Just depends, but and then you can get so those are the rounds, and you can get acquired at any time. Typically, the acquisitions happen. It's like a bell curve, probably more in the Series A, B, C type. Although some can happen at C, where you would get acquired. Yeah, so those are the various stages. And traditional banks, at least when you think about startups and that grow and scale, they can come in a little bit at the seed stage. Like banks, typically they're not playing around in the pre-seed, but they'll start to come in into the seed, and then they really begin to ramp up Series A, B, in terms of, and then the banks really get involved because they want to. Then there's the companies are more stable. They can do more loans. They can help them with IPO, mergers and acquisitions, all that kind of stuff. Banks love that. The traditional banks.
Thank you. That was good. I feel like I'm going to rewatch this and like take notes. But as you think, I know back, like, I'm going to ask you two questions.
Sure.
The first one is, what advice would you give to someone that's the David of 20 years ago? And then the second question is, how do you prioritize your family? I know you have 3 children, you love fishing, you love doing all those things. How do you find that balance?
Yeah. What I would have told my David 20 years ago is a lot of what I put in my book. It would be more discipline around goals, more discipline around health. Thinking about really what's important in life. I think financial, call it acumen, in terms of how I was spending money, saving money, and investing money, and stupid things I was buying for, so that would have been what I would have done differently 20 years ago. Your second question was,
how do you balance it?
Prioritize
your kids, your family.
Yeah, a lot. It's tough. But they're very supportive, right? And so I think that's on one side. You have to have very supportive. A lot of it's meditation and focus. Like I don't watch minimal to zero sports. And I was very athletic. Yeah, I watched very, very little TV. So, those are like things that I do. And on the flip side, right, I exercise with my wife every day. So I get a twofer, right? I'm
You
healthy
spend
and I'm
time with
spending time
her
with,
and yeah.
and I'm spending, right. And then so vacations are very, fun, sacred. Dinners, family dinners are very, we try to prioritize those. And I'm not perfect, by any means, but and maybe the last part of it is just like meditation, right? I mean, it's been like that I haven't done historically. I'd say maybe the last 10 years, I've gotten 10, 15 years. And then really the last, actually writing the book actually also helped me fine tune it. But really like spending the first half hour every day meditating and focusing on really what's important. Like, and how am I gonna look this, oh, you say family's important. Well, what what are you
Right. How do you
doing?
live that
Like,
value?
yeah, really,
Right.
like okay, family's important. That's my value.
Mhm.
Well, what am I doing today that really models that, right? And how am I going to prioritize my day the right way? In fact, amongst all the other priorities I have, right? My health,
Right.
work, all that kind of stuff, right? And other goals that I have, right? So hopefully that answers the question there.
Yeah, no, it does. I love it. Like I kick off my day. I wake up an hour before everyone else wakes up because I like having that hour to have my coffee, to make my list, to say like if I could get one thing done today, what is that one thing going to be?
Oh
And
yeah.
to setting goals, I always encourage people like if you go to a networking event or if you're going somewhere and you're going to be meeting people, like have your target list. What do you want? What do you want to leave that room feeling? How will you know that you were successful? And so to me, that hour in the morning is where I get like 95% of my thoughts out.
Yeah. Yeah, it was funny because I used to think, okay, I'm up, I got to go, I got to do this,
Mhm.
and just started going into like action
Yeah.
mode. And really, the last several years has been nope. It's very much quiet, relax, focus, and I have a routine that I go through. I talk about it in the book, but I have a routine that I walk through in my mind. It's a mental, you know, meditation,
Yeah.
focus, priority, and all that kind of stuff. And yeah, and it's been helpful. It's the best I can imagine. I believe it's the most optimal way to start my day, and I've been doing it a while now.
David, thank you so much. In the bio, in the comments of this episode, you'll be able to have the link to both Angeles Investors and to David's book. And, I'm so grateful that you came on. I know that you are a really busy person, but, this is such a good educational moment for our community. And I know that that's like where your heart and your money is.
Yeah, literally, both of it is. No, look, it's great to be on. To all those who are listening out there, feel free to connect with me on social. My book. If you have any questions, comments after reading my book, feel free to chime in. And yeah, and if you so choose over time and you can, we'd be honored to have you all as members of Angeles Investors. We need more of us. So would
Absolutely.
appreciate that.
All right. Well, thank you, David, and, mucho éxito.
Gracias. Take it easy.
Bye.
Bye bye.